Welcome to today's webinar on AI-powered AP, hitting the KPIs that matter most. My name is Alex Roberts, and I'm part of the production team here at SSON Digital, and I'm delighted to be hosting this webinar today. Just before we get into the webinar, I'd like to go through some housekeeping. For those of you joining for the first time, I just wanted to highlight a few important tools in the console before we begin. At the bottom of your screen, you will see a series of icons. There is an attendee chat where you can pose your questions to the speakers, and we encourage you to do so. We also have some time reserved at the end of the session to take any questions, and if you have any technical difficulties during the session, you can also message me and my colleagues here, and we'll do our very best to get right back to you. It's not always easy presenting online, especially when you can't see the audience, so there is also a tab with emojis where you can give the speakers a thumbs up or a smiley face if you agree with their point. And finally, there is a resources tab with some great additional resources from our speakers, sponsors, and the SSO network. And in this tab, you can also find details of the speakers for today and connect with them on LinkedIn. The resources we have available for today is our new Essentials Report Guide with Springtime Technologies on discovering the future of AP KPIs. Now I will just introduce our speakers for today. So firstly, we have Stephen Sandring, who is the CRO at Springtime Technologies. Stephen has spent the last 25 years as a CRO in companies in the P2P world, from early stage through to mature. 5 of those successfully exited over 100 million and one achieved unicorn status. As CRO, he has defined and driven the whole go-to-market strategy, including building elite sales teams, sales support, and proactive focused marketing. All of these companies became early market leaders due to their sharp focus and GTM effectiveness, and his focus is on client success and adding value to clients and partners in every interaction. And then we have Alexander Hajdus, who is the former global process owner and procure to pay. Alex Hajdus is a seasoned finance transformation leader with over 15 years of experience driving global process excellence and compliance in accounts payable. He has held key global process owner roles at high-profile companies and specializes in AP automation, operational efficiency, and governance frameworks that support scalable, compliant finance operations across multinational environments. And then we have Helmut Rattenberger, who is the Global Operational Efficiency Lead for Life Sciences at EY. Helmut is a senior partner in the consulting practice of EY in Zurich. He has more than 19 years of versatile experience, transforming some of our largest global clients across multiple industries. He leads the invoice to pay hyper-automation COE at EY Switzerland. And then we have Matt Hammond, who is the general manager of e-invoicing at Avalara. Matt leads Avalara's global e-invoicing strategy, helping businesses simplify compliance and scale. With 20 plus years in e-invoicing, he's shaping the future of e-invoicing and real-time reporting. And now I will hand over to you guys.
Thank you, Alex, and good afternoon, everybody. I might even be good morning for one or two of you. Looking forward to covering a lot of content and hopefully will reveal some insights around the subject matter that we're talking about. Just to start with, though, just going to make sure I can change slides. Probably none of you have heard of Springtime Technologies. We are a Viennese company and have not had a marketing or sales division since inception, which is a pretty unusual thing for a company that's as successful as Springtime is. Now, unfortunately, you've heard my biography, so you know that I am in sales and I'm here to build out the organization. But because we've built out purely through references from customer to customer, as you can see on this graph, we have been a very customer-focused organization, and we want to retain that. So as an example of how we're going to do that, we don't have a sales team. We have ex-GPOs, so everybody who works here understands the problem that we're trying to solve. And I think the other important thing to talk about here is that all of our customers use us to manage all of AP, so 100% of their invoice volumes go through the Invoice Track solution. And some of these organizations are really complicated. So see if you can guess which one of these logos has got more than 10 million invoices, 50 ERPs, and is in 70 countries, because that's an interesting implementation for us. Right, so one of the things I wanted to cover today as we go through is I want to give you a little bit of a tease. So imagine if you could get 90% touchless processing through accounts payable today and lead towards 100% total automation in the future, and it didn't cost you anything more than AP is costing you today. That is my challenge, to show you how you can achieve that by the end of the session today. And it'll be a test. So you've already heard that we have a cast of thousands today, and I'm pretty sure that most people would advocate not doing what we're doing today. Live demos, cast of thousands, working with pets and children. But we are going to go for it today, and we've got a stellar cast today, so I'm sure we're going to get some real value over to you as we run through. So first of all, here's the agenda for today. We want to take you through a little bit of a journey that is about where AP is today and where it is in the short-term future, and what's happening globally. We're going to cover some of the key issues in accounts payable that need to be addressed for all of us to be successful, and many of these things that you'll know, so we'll zip through the obvious stuff fairly quickly. And then we want a vision of what the future can hold, going down the right path. And finally, my promise is that you will be able to have possibly full automation with e-invoices managed going forwards and continuous improvement at no extra cost than you're paying today. Let's see if I can do that. So let's start with the evolving landscape of AP. Just before we go on to a really important bit here, which is really about mandates, which Matt's going to cover as the e-invoicing expert here. But the evolving landscape is not just about mandates. So the mandates are beginning to come a bit front of mind, and Matt will explain why. Helmut's then going to talk about how we get cost reduction targets while still growing, which seems to be the #1 conundrum in GBS and shared services. And obviously technology is going to be a crucial part of that, but we're going to cover that too. And some of the stuff that we need to deal with as we work in accounts payable. So I want to cover off some of the things that are also on this slide, because we're not going to go into them in depth as we go forwards, because you know this stuff, but I did want to kind of remind everybody of some of the issues that we need to deal with going forward. Sorry to put you through this at a moment of pain. But I do think it's important to really have a good understanding of all the issues that need to be addressed, so that when you start looking at solutions, it covers as much of this as possible. So the first thing is, we do need to accept that tech is getting more complex in many respects. So the facilities you get may be better, but there's more of it. You've got multiple ERPs that you need to deal with, quite often through acquisitions, and integrating those into your back office is tricky. I mentioned one of our customers that has 50 ERPs that we need to integrate with just for AP. So we know globally, most of you are really large organizations that have a complex ERP hierarchy, but there's also multiple invoice channels coming into accounts payable, not just mandated stuff that's coming up, which we're going to discuss in a sec, but also e-invoicing that we've tried over the last 25 years with varied amounts of success. And you've still got PDFs, and you've still got paper, and you still will have going forwards. On top of that, you've got multiple suppliers, you've got OCR and scanning, supplier portals, tax engines, and the complexity of acquisitions, as I mentioned. So AP is a complicated setup, and it has lots and lots of challenges. But some of this leading to the churn of talent that we've seen over the last 25 years. I still think the average in AP is about 25% churn in shared services year on year. So it's really hard to build out a high-performing organization when you have that level of churn. And I'm sure, as all of you are seeing, we're seeing a dearth of talent, a real difficulty in hiring the people that you want, who are educated, who have the languages that you need, and understand some of the complexity of the technology that you're going to bring into accounts payable through different invoice channels, different interfaces, supplier portals, and all the rest of the stuff. So that's a fairly complicated set of issues. So before we dig into some solutions that our experts have seen in the past, and some solutions that we can offer going forwards to fix some of these things. We're going to just jump into invoice mandates because everybody knows that they're coming, and most people I talk to are not spending tons and tons of time worrying about it yet or thinking about it yet. So we want to talk a little bit about what's coming. But before we do that, we have a little poll that we want to jump in. If you could answer those two very, very simple questions. I just want to find out where your headspace is as far as the invoice mandates are concerned. So do you think they will help accounts AP to improve its processes and efficiency? Or do you think they're going to hinder AP and cause problems? Okay, we can see which way we're heading. I can see that this is a glass half full audience, I would suggest, at the moment. Okay, perfect. So just sharing the results. Obviously, 65% of you feel that it's going to help improve processes and efficiency, and 35% of you think it will hinder. And there's nobody, obviously, we didn't allow anybody to sit on the fence here, did we? So, okay, let's move on to Matt Hammond, who's going to talk about e-invoice mandates. We should do this poll again after Matt's finished and see if it changes anybody's mind. But maybe, anyway, over to you, Matt. Let me see if I can just move this slide on.
Okay, brilliant.
Okay, here we go.
Excellent, thank you. I thought I'd kick us off with just a quick flash of what we've got coming on the horizon. So over the next 12 months, we've got 5 major mandates coming. There are others, but these are probably the ones that will resonate most with the audience we have on today's meeting. I'm not going to go through them one by one, but this list does highlight something that's quite interesting, a change in direction, if you like, with e-invoicing mandates, as all of these include accounts payable as part of the mandate. Now, think about where we've come from. We've come from a place where mandates, they're historically been associated with accounts receivable and the need to send invoices or clear invoices, via the government electronically. But now, and forward-looking as part of a new trend, the requirements have crossed over. So it's no longer just about sending or clearing those invoices. It's about receiving those invoices electronically. If you like, accounts payable has now become front and center of these mandates. So things are about to change over the next 12 months and beyond. And if we move on slide, Steve. So we've either all heard about or experienced firsthand some of the benefits that e-invoicing has brought for the purpose of automation in accounts payable. So think high straight-through processing, high no-touch invoicing, high numbers of invoices processed per FTE per year because all the efficiency gains that you garner from it. Lowering down the number of supplier inquiries into shared services because it creates visibility, and overall greater control about what you receive from suppliers. Now, I think there's maybe misconception might be a bit of a strong word, but certainly I think there's an assumption in the market right now that those e-invoicing benefits that are synonymous, or those benefits synonymous with the e-invoicing, they're just going to come naturally from the government-led AP e-invoicing. Well, that's not correct. A lot of the benefits that we associate with e-invoicing, particularly as it relates to accounts payable, now they're predicated on the fact that it's come from automation providers who are owning both sides of the transaction. So effectively, they have the buyer and the supplier of the equation on the same solution. that allows them to perform various different functions in the background that people don't actually see, which is where a lot of these benefits originate from. As an example, so validations have been key to delivering a lot of these benefits. Now, looking forward, with the exception of France, you can't put business validations in the mandate equation. So once the invoice has been sort of accepted by the government, it has to come to you. You can't reject it back. In most cases, I'm generalizing here, but any validations that are performed by the government, they're done for the purpose of tax. Those governments, they don't care if your supplier is sending an invoice without a purchase order or without the correct purchase order on there. Really, their validations are to ensure that the correct tax has been logged, the correct entity is sending the invoice. They really don't care about the business requirements, let's call it, that you do care about. We also won't see the governments doing any fancy augmentation like we've been used to see when e-invoicing was all about automation. They won't be adding those PO line numbers in for the small suppliers who don't understand or can't get the PO line numbers out of their system. They won't be converting all the units of measure to the units of measure that you are using, or converting the tax codes into the tax codes you'll be using. I don't think people right now today appreciate the lack of control they're going to have on the incoming invoice when these mandates go live. We're also going to see the suppliers, and I've seen it firsthand, the suppliers get very, very polarized on what the governments want. And they'll be led in the main by local providers who want to get them up and running as quick as possible. So they just get focused on these new government requirements that are given to them and say these are mandatory requirements for the invoice. They kind of drop the ball and forget all about they have a customer at the other end that's actually got to pay that invoice. And that customer is always required above and beyond the legal requirements of an invoice. But that, as I say, kind of goes out the window a lot, what we see when we transition onto these e-invoicing mandates. Everyone listens to the government rather than their customers. So I think that there is certainly a challenge on the horizon. I think there's also benefits. So get this right, get the right systems, processes in place, and you will still garner those benefits that we talked about a moment ago that you would associate with the invoicing. But I said they won't come off the bat, and they won't come without going through a period of change management with yourself and with your suppliers.
Very much, Matt. So I really should have done another poll at the end of that. So it's hopeful that once things are set up and the structure's in place, that it will continue. So that should give us some help. So I've just made a little bit of list of some of the things here that are still worth thinking about, other than the multiple APIs that you need to manage to go to multiple gateways, which is why Matt's here, because obviously Avalara handle all of that for you. But I think some of the other things that are worth noticing is that some of the ways that suppliers can fill in the fields within the government gateways are random. Some of those fields are not specified for any specific data field because the governments aren't interested in many of the data fields that you are. So if you've got multiple suppliers using multiple different fields to send you invoices, it's going to create a little bit of a problem. Obviously, we're still, even with some of the mandates and the European ones in 2027, it's still going to mean that you're probably still going to have 40 to 50% of invoices coming in that is PDFs and paper. So that still has to be dealt with. So there's a couple of things to think about there. I just wanted to cover quickly why we created a partnership between Avalara and Springtime. And most of it is covered by what Matt's just said. As we go forwards, and roll out globally to manage all of your invoice volumes, we can ingest anything that you want that gets sent our way. So Avalara, that could be 50% of your invoice volumes, but it could be from 70 or 80 different countries. Well, probably not yet, but in time, maybe it'll be a large number of countries. And all of the APIs that need to be connected to those government gateways are handled by Avalara. They also handle tax to make sure that the tax workings are correct. So from our perspective, because we integrate with them, it just means it's business as usual for AP. As more gateways go live, we receive the invoices from Avalara. And the nice thing here is that we can actually run around in the background and make sure that using our AI and looking at past history of invoicing from your suppliers, we can augment the data that you need to make sure you can match the invoices coming in with whatever purchase orders or whatever purchase orders you went out. So it should mean business as usual for AP. Whilst we in Avalara frantically run around managing chaos in the background, making life easy. But once we've ingested the invoices, we extract the information from them, we unpack them, we process them, we straight through process them where possible, we workflow them for if you need a three-way match. We try to get you pretty quickly to 80 or 90% touchless in AP. And you can build rules for different suppliers based on, is there a fourth-way match around a contract, or do you need to pay them quicker to get your dynamic discount? So all of that's fairly easy to set up. And the nice thing here for AP is that they don't any longer have to consider tax compliance. They just look at exceptions, which we'll show you that a little bit later on. Yasna here is going to be our lady showing you that later on. But the idea with us is that all AP have to deal with is exceptions that we can't automate. And they see an invoice and they see a data field and they get told what the exception is and why and what they need to do with it. And then once all of that's been dealt with, then it automatically gets posted. So that's just to show you why we have the relationship with Avalara. Now, one of the things that we have seen in GBS for a large number of years is this 5% cost reduction target year on year, whilst you're growing and dealing with more complexity. So we've talked a little about tax and compliance and talent and churn, but I would like to now pass over to Helma Rattenberger, who's going to talk to you about how EY have been dealing with this issue. And over to Helma.
Thank you, Stephen. Good. So I'll start with a little slide that will give you a little bit more background what is actually in the engine room of these solutions, right? And why am I starting with this? Because it will also help you understand the productivity, right? What I mean, a solution like Springtime is solving for and how it's evolving over time, right? In terms of capabilities. And I mean, if you start on the top left, the industry started with intelligent optical character recognition, right? So that was the start. That's when everything started. You added machine learning algorithms, and you already had something that was quite efficient, right? Then there were providers like Springtime that added generative AI capabilities in deep learning neural networks, right? And that was the game changer for me, right? At the very minimum, what we saw at clients, and I'm gonna on the next page when we get there, not yet, but when we get there, I'll show you some examples and some journeys, and I'll bring this to life with you. You see how powerful the technology is that is underneath the hood, right, of these solutions, right? So on the furthest right quadrant, right, with neural networks, you have everything, right, from invoice validation, fraud detection, language agnostic, character recognition, everything is including, right? You have complex PO matching. So the solutions already do a lot, right? But let's go on the next page, because the quintessence of everything that we learned on these journeys, right? And here is 4 very successful journeys, right? And you see a big number on the right side that may be a client that has 56 or 50 plus ERP systems or not. But bottom line is all these clients embarked on a journey. You see where they roughly started in terms of efficiency, right? All of them had between 6 to 9K invoices that were processed by the average AP clerk within a year. And now none of these, just with the technology, reach the efficiency that's here on this page now, right? And I mean, this efficiency is also fluid. It goes up, it goes down. It depends on how you manage the process, right? But what I always say is you can spend money on a Ferrari and it will drive relatively slow if you do not pave the road for it, right? And what we did here is with these clients to optimize both, right? So we implement a system, but you do the heavy lifting, and Alex can confirm that, right? Probably you do the heavy lifting still by paving the road, right? I mean, I remember just recently we had a process workshop with a client who had the PO in liters and the invoice came in kilogram, right? Even neural networks and agents will have a tough time telling you, yeah, that's okay, the consumption is accurate, and yes, pay the invoice, right? And things like this, yes, you know, I always get the question, can technology, can agents, can agentic AI, can they overcome this? Probably. You can spend a lot of money, you know, on solving an issue like that, right? But you can also just go to your procurement organization and say, if the client sends the invoice in kilogram, why do you have the PO in liters, right? So there's some disconnect somewhere. And for us, you know, one of the key success factors is that you spend a lot of money on digital enablers, but then you do not spend money on building a CUE around it that continuously optimizes the process, right? And optimizes it for the solution that you buy, right? And then you call the consultant or the provider back and you say your solution is not working, right? Which it is. There's success stories on this slide, right? That clearly say it's working. But even if you spend a lot of money on digital enablers, you still have to do the legwork. That's not going away, at least not today, right? So you see, I mean, all of these clients, actually, there's two success stories here. With one of them, we started in Japan, and with one of them, we ended now in Japan, or are ending the journey now in Japan. So also the complexity in terms of geographic coverage, right, and regulatory compliance, and is quite enormous what these systems can do today. So my key ingredient for reducing cost targets while still growing is to leverage the system for what it's actually meant to be, right? So to drive the Ferrari on a paved road. And then you will see that your headcount is actually reducing, that the system is doing what it's supposed to do, and you're leveraging the technology that's under the hood, right? Which is quite sophisticated. And what we see now is that these solutions create agents that sit on top of the solutions and address point problems, right? That the solutions are becoming more broader, so covering more of the end-to-end procure-to-pay process, which they should, and which all makes sense, right? But still, the hard work doesn't go away. So if you want to reduce costs while still growing, you have to create a COE that is dedicated to optimizing your process. Good. I wish I had an easier answer for you. Just to push the power button on springtime and
Yeah.
But
Well,
maybe Stephen, you can correct me, but that's not programmed yet.
no, it's coming. It's bound to be coming though.
It's bound, exactly. Next release.
That's great. Thanks so much. So that's a little bit about obviously automation being key. We will go into more detail around AI, what AI has done and what AI can do in the future. So Helmut will be back. But in the meantime, we want to talk about what you need to measure in order to make sure that you can grow and have continuous improvement. So this is going to be a theme we come back to in a few minutes. I'm going to bring in Alex to talk about KPIs, because there are some things about the KPIs that we use which I just want us to think about. As I'd like Alex to talk about, you know, what KPIs they use at JTI, why they pick those ones, and how on earth they collect the data to actually measure them and see their success, because those are the important things. But I also want you to think about this as you go through on the why. So KPIs for me are like, you know, if you're in a park and you've got your dog with you and you throw a bone, the dog will go straight to that bone, even if it means going straight through a kiddie's picnic party. And KPIs are a little bit the same. They have some negative consequences, and it isn't really important to plan for them. And I think that efficiency has to come with effectiveness. And on that note, let me just bring in Alex just to talk about what you did at JTI, and love to know, Alex, as well, if you were going to go back and do the whole thing again, what you would do differently.
Thanks, Steve. Maybe first remark, I mean, we all are here because we either manage or we work in accounts payable. So I'm quite surprised how positive everyone is, because in AP, I mean, if you really work within accounts payable, you know that typically all of the process failures, because we are APs downstream, so all of the process failures always land with accounts payable to be solved. So ultimately, why would we expect suddenly the government to want to ease our lives? But just a small remark. I think that specifically for KPIs, I mean, our journey was, I wouldn't say it was not normal. I mean, I think that we have done what everyone is doing. What really mattered in our case is to identify what are your business requirements, what are the business goals, where do you really want to be? Is it the compliance that is important for your organization? Is it really the efficiencies you need to squeeze every last drop out of the automation? Maybe like Steve mentioned, right? There's a lot of issues around the talent retention. I mean, no one wants to really do the repetitive manual accounts payable copy paste work anymore, or maybe all of them are true for you. So I think that identifying really what are those business goals was important for us. And then of course, it is quite obvious, but when we were creating our metrics, you really don't want to create that vanity structure when you just create metrics so that they look nice on the slide, but they are not actionable, right? I mean, what does it really mean if you fail or you miss to pay on time by 10, 20, 30%? Does it matter? What does it mean? What are the root causes and why it's happening? So how we started, I mean, we have probably all of you, even if you struggle with data, and we had some issues with data, you can probably estimate how many volumes you have, how big of a team you have that is processing those invoices. But the only thing that you can do, you can show it to your stakeholders, you can benchmark and see if you are, you know, better, worse, but you don't really know. I mean, you cannot really progress, and you don't really know how to fix those issues, how to progress, how to improve, right? It's just a number that you can show. Maybe sometimes it will go up, and next month it will go down. Then you have a year-end closing, and it's just going to go terribly wrong. So you don't really know how to progress and how to make those KPIs be live in a sense. And then for us, really implementing Invoice Track was a game changer. We suddenly knew exactly, you know, from the dashboards why we failed to pay on time, what are the key reasons. We were able to assess where our teams are spending their time, and it's literally minute by minute we were able to say, you know, where are our bottlenecks down to supplier invoice level. And there were quite a lot of surprises. You know, it was not only, let's say, complex PO matchings, but we, for instance, noticed that our team is spending a lot of time just communicating with internally, making notes and within the system. So all of this, we started to understand, and we were able to analyze and start creating that action plan behind. And I think that ultimately this is exactly what Steve mentioned at the beginning. It has to be this efficiency, this effectiveness of the KPIs, rather than just those slides that sometimes look better or worse depending on which season you are in. And it's not, and on top of it, I think also what's important is really that you are able to act quickly on those insights. Because today, yes, maybe you have a team that does some data analytics. You extract the data, which is always a pain. You start analyzing, and half a year later, maybe you have new issues that you need to focus, and that's insight that you had already taken from that data, from half a year ago, maybe it's no longer relevant. So yeah, having not only the availability of data, but also being able to see it instantly within a system, that was a real game changer for us. And we were able to start analyzing where is the key bottlenecks, where we should focus, how do we get, you know, an action plan behind those business objectives that we have set at the beginning. So where do we really have to focus? What are our priorities? And how do we help the team to be more efficient in what they are doing, and then ultimately for the organization to have the right outcomes. And I think, Steve, you asked maybe what I would do differently. I think that one of the things that definitely is always a pain is, okay, you have the right tool. So we were able to challenge our organization to say that we need the right tool to be able to improve our accounts payable, right? But after we got the right tool, of course, behind those actions, as I mentioned at the beginning, AP is always cleaning up the mess of everything that happened before. You have to take your wider group of stakeholders onto a certain journey. So for us, I think that what I would probably do a little bit differently, I would bring the procurement, the IT, the markets, the treasury earlier on the journey, so that once I have the tool, once I have those metrics, and I know where we have the bottlenecks really down to a minute where we spend our effort, then when I bring it back to those stakeholders, they understand that this is, you know, what are the objectives, why we are coming to them with this, and it would just create a little bit of less friction, and we would be able to achieve things a little bit quicker. I think that overall, you know, you need to have the right tool, and you have to have, you know, all of the stakeholders brought on a journey early, so that it's just easier for you to act and improve over time.
Yeah, I guess that's one of the challenges for a GPO, is influencing everybody along the journey. So brilliant. Thank you very much, Alex. So I want to show you what KPIs can look like and what they can do for you quickly. We want to do that live. We were going to do a poll next, but I think we're going to skip it because I think we haven't got time. So we were going to do something on what KPIs you focus on, but we can do something about this at another time. So if we want to continuously improve around AP, you've got, as Alex was saying, you've got to have visibility. You can't improve your invoice processes without a view of each invoice channel and knowing where to focus to make your changes and improvements. If you can prioritize always on the most onerous process, or the ones that are creating the bottlenecks, addressing them first and knowing what you do need to address, then you've got a pretty good chance of actually getting higher STP numbers and using, you know, AI and agentic AI to support some of those improvements. So one of the questions has always been, and I think different consulting firms have different views on this, do you plan and analyze your processes first and then automate? Or do you automate and use some of the tools that with automation to then plan? Most people have in the past have said plan first. And what we're going to show you now is just some examples of how you actually can automate and then plan if the automation tool gives you the visibility you need. So I'm going to pass over to Jasna here, who is going to do the very risky thing of giving you just a quick demo of what a drill down from a KPI dashboard can mean, and the kind of information that you can get if you get all of your data into one place. So yes, over to you. And that's the poll that we were going to do, but are not now.
Okay, so here we go. So here, this is one workflow dashboard where you can see where the most of the AP manual time is spent on. And you also have here the possibility, so you see the steps, you see that there is some automation in place, but still there is input from accounts payable needed. And you can also get some insights, so you can really drill down to see on which field level most of the time are spent from accounts payable. So you see really all the details, and you can also jump directly to the documents and then think of how you can improve here the quality of the automation and the data processing. And you see it here, like, so you can also filter on specific, so that you just focus on the big points at the beginning.
I guess this is what I was saying just now, right? I mean, this is exactly the dashboard from this, where you have, let's say, big volumes that don't cause any friction, and then you have low volumes that cause majority of the effort for your team. And this is also, I think, the point that Helmut was making around the COE, that you also need a team that is dedicated to analyze and go through these dashboards and really, you know, take most out of the things that are available within the tool, to see how the work can be improved. So.
Yeah, so the nice thing here is if you can actually analyze each invoice channel, even down to each supplier, even down to each invoice, you've got a chance of actually fixing some of the processes and driving your automation and with continuous improvement. And this is something that Helmut and EY are helping us with a lot as well. Get the visibility and then plan properly. So we're gonna jump now into Yazza. We're going to keep you on and just look at what the impact of AI has been. We'll talk about it a little bit once we've seen the demo. But what we want to show you is, we talked about some of the invoices that we may get from government gateways and how we might need to recognize what fields are where. Well, one of the things that we do is we analyze all past data, maybe the last 18 months of your supplier data. So we've got a pretty good idea about how things are structured and what data goes where and what it looks like. So we can tell what fields are using what data, but there's also a lot of intelligence in the background that's going to help just do some of the matching that you can't do. So let's look at some of the simpler stuff, which I know Helmut said wasn't simple, units of measure and stuff, but some of the more simple stuff that AI's solved. And then we're just going to give you an example of an agentic AI, which we'll show you live, to show you how things will change going forwards from an interface perspective, and also the kind of tasks that you can do.
Yeah, so here, for example, we see the invoice document, so it doesn't matter if it's a paper, PDF, or if it's an electronic invoice. So we are able to extract all the data and match it to the right fields. So like here, the vendor data and the company data, the entity data. What we also do on top, we verify the input. So for example, here you see the indication that the vendor VAT ID mentioned in the vendor master data in your master data management system is not matching the vendor VAT ID the supplier put on the document. So we see here there is a different number than here in the vendor master data. And then you can take the next steps. But what we additionally do, not just extracting the data, but we really perform the coding. So here we see, for example, that on the document itself, there are 8 lines, but the coding was done on 2 lines only, because it's the same type of expenses. So even by clicking on the right line, it is highlighted. So you see which items have been summarized. And you also see a text summary where we use large language models to summarize the subject of the documents. So here we see we have office supplies and cleaning products, and then a different line with milk, because milk also has a different VAT rate. And that's why it's also, you see here is a different tax code, but also a different expense GL account, which was automatically selected by the system based on historical data.
Okay, so that we're showing some of the examples how AI is used in a more intelligent way than it has. Then, you know, you can remember 10 years ago where you couldn't match anything basically unless everything was perfect, and we had to use PO flips. So those days have gone, which has made us much more productive. And now we're just going to give you an example of a hint of what the future holds around agentic AI, which everybody is talking about, but it's still in its infancy. But we are building use cases with our customers. But we just want to show you kind of how user-friendly it is, and a couple of examples of what you could do.
Yeah, so here, for example, we have withholding tax, which is known as super complex. So we see here also a withholding tax table, but it is not filled. And that's where we use agents now. So the right agent, the withholding tax agent, is selected, and just by clicking on go, the agent is now analyzing the document and also analyzing the tax legislation, and will then pre-fill the withholding tax information. So we see here that the base amount and the tax amount was now automatically pre-filled by the agent. And we also see why the agent decided it like this. So the agent said, because the CUIT number starts with 2, which is a natural person in Peru, that's why this specific withholding tax code was selected. And also based on the legislation, only 80% of the net amount is withholding tax based. And that's why also this was calculated completely automatically by the agent.
Okay, do you want to do the car one as well? Because that can show a little bit of reporting
Yes.
as well, which is kind of fun.
Another example is, for example, the coding of a company car invoice. So also here, there is a dedicated agent, which is called business car agent. And also here, by just clicking on go, the agent will perform all the coding. So now the agent will fill in the expense account, also the cost object. So we see here step by step what the agent is doing, also why explaining. We also see that here an internal order number was added, and this is based on the description in the master data. So we see that the license plate on the invoice here is referring to this specific internal order. And that's why the agent selected this order number. And you can also proactively chat with the agent. So you can tell the agent, for example, give me a report of all costs of this. Sorry. And now it's not clear which license plate, and then the agent is asking you, and you can say yes. And now the agent will generate the report for you, which is then an Excel sheet, and you can just download it and open it. And here you see the generated report with all the costs of the license plate.
Okay, yeah, thank you very much. Well, so that's just a little hint of things to come, the kind of things that, can you just jump down? Yeah, here we go. So, you know, there's been a lot of change over the last 10 years on mismatches, which we showed earlier. Now we're looking to the future and all of the different types of things we can automate, you know, even from some examples that you've seen, but also, you know, working from attachments or whatever it is. Most of the structure today, and Helmut's going to come on and talk about the changing workplace as far as AI is concerned now, but some of the stuff that we look at is we advise and AP then decide if they want to take the advice. As we go forwards and people become more comfortable with agentic AI, we produce supervising agents as well that can take a decision as to and kick off other agents as well. So it's all quite exciting going forwards, and it does give us a, you know, the hope in the future of getting to serious levels of automation that we've not been able to in the past. And some of this is going to include, you know, conversations with suppliers as well on exceptions. Okay, so Helmut, if you could jump in here again.
Yes, I will, right? So there's a rather provocative statement on here, right? That we said we've entered the most profound workforce shift since the Industrial Revolution, right? So it's not just a provocative statement, but it is what we see, right? I mean, I have two quick war stories here, right? I had a CFO meeting with the CFO's leadership team from a large pharmaceutical company, and basically the entire leadership team was asked to create their own agent when they came to the meeting, right? And the examples that you got from in the room were quite creative. One created an IFRS agent to answer all the questions that the business always had, right? And and so on and so forth, right? So it was really inspiring to be in that room, right? And let's go on the next page, right? Because what we see is that it's a myth to say that the technology will replace humans, right? But what the technology is doing is humans that adapt agentic AI, humans that adapt AI and leverage it, right? And organizations that adapt it, they will crowd out humans that do not leverage technology, right? And they will crowd out organizations that do not leverage technology to the fullest potential. And that's more true than ever before. And what do we see, right? In a what we call a modern workforce component, right? So we see the core talent, right? That's upskilling, right? So what the core talent has to bring to the table is changing, right? But that's a good thing, right? It's a good thing to change, to stretch yourself. But what we see is, the traits that you need is creativity, right? You need to have more leadership, more interpretation of analysis skills, right? Rather than in the past just collecting data, putting it in Excel spreadsheets, right? What we see, and this was also in the recent MIT study, right, is partner ecosystems, right? So what you see here, right, a company like Springtime, that should be definitely part of your partner ecosystem, right? Because they support your capacity. They provide specialized expertise, in this case for accounts payable, right? And they create tools that will augment your workforce, right? Your accounts payable clerks. And then the last thing is the digital workers, right? That's everything else that you have to bring to the table on top, right? They will help you save time. They will automate repeatable tasks, right? But these three ingredients is what we see a modern workforce in an organization transforming into, right? In the past, it was humans. You had your standard ERP systems and Excel. And now it's becoming more and more important to have all three ingredients at the table, right? And I mean, I'm sure nobody in the call this is new, right? But let's go to the next page. We did, of course, also some statistical surveys, right, where we asked a lot of the CXOs what they're working on, what they're doing with AI-driven workforce transformation, right, around the topic. And if you see, 70% of the respondents said that they are leveraging AI agents and they are transforming automation, right? And 40% of them said that they have already launched agents, right? In fact, the Amazon CFO said that at times he was interacting with 15 agents at the same time, right? So not just 10 company-wide, but he was interacting with 15 just in finance, right? So there's new roles appearing, right? A human in the loop is a word that you're going to hear more and more often, right? In these ecosystems. 50% of enterprise apps already use AI assistants, right? I mean, you've seen here what Jas showed, right? That even a tool that leverages neural networks, that leverages algorithms, right, is creating agents that you will interact with, right, that solve problems that you otherwise will not overcome. The text agent was a perfect example that you showed, right? And then the last piece, and also equally important, is, right, that AI agents will improve. It's a positive message, right? They will improve growth. They will improve our work-life balance because they will take away some of the mundane work. But we go back to the point that I said in the previous slide, right? You will have to create a skill set that's slightly different than what the past wanted from you. So let's all work in that direction.
Thank you, Helmut. That was extremely useful. So we're coming to an end. I'm trying to make sure that you get at least a minute for questions. So some things to think about that we've covered here. We've covered the landscape and how it's evolving, what problems need solving. No big news there. How to solve the problems, at least our way. And we've looked a little bit about what's coming in the future. Now, I did say at the beginning that we were looking at ways of helping organizations that wouldn't cost anything for AP. And I only say that because I know over the last 25 years, AP have spent so much time and effort on e-invoicing and OCR and workflows and portals and the rest of it. And none of it's really had a pervasive effect, although it has had incremental benefits. And with technology moving forwards now, we do have the opportunity to do something really quite substantive, even to the degree that these days we have committed to supporting the productivity goals of our customers, you know, whether it's 65% over 7 years or whatever it might be. We're there to support that journey to make sure that we're in sync with what you're doing as an organization. So I want to just say a couple of things. One is that a percentage of you will have not very much automation, and you know, if you're working on less than, I don't know, 20,000 invoices per year per FTE, that suggests that there's a long way you could go with automation. And you know, we would love to work with you. We would love to really focus on getting your complexity managed, reducing your commitment to expensive talent, and helping the business better, and future-proofing you as well around all the e-invoicing mandates, because they are going to be complicated. So the package we're kind of suggesting here is Springtime providing a nice harmonized AP view in a kind of a cockpit or a platform, so that AP don't have to worry about tax and complexity and technology. We've got Avalar as part of our partnership here, who will connect to all the government gateways and manage all of the e-invoicing mandates going forwards. So you don't have to worry about that. And then we've got EY here to say, let's get things set up the right way with a center of excellence so you can maximize what you're doing, but also let's do continual improvement as we go forwards around processes. So that's the kind of package that would be nice, whether it's us three or a different three or whatever it is. That's the kind of solution that you probably need going forwards. So the ones of you that have got very little automation, the ROI on achieving these things, it is massive. So and we would love to help you with that. And then there'll be some of you that have actually invested quite a lot in automation over the years, whether you've got, you know, expensive workflow from SAP, or whether you've got OCR that's last generation, or whether you've got e-invoicing from, you know, Tungsten Automation, or ESCO, whatever it is. There's an opportunity here with us, I think, to future-proof your AP business, particularly in conjunction with all the e-invoicing mandates that are going to come along. Future-proof it, let us manage all of that stuff. But also, here's my trick, right? By replacing the cost of those legacy systems and upgrading to something a little bit more profound that we've been discussing today, in 80% of cases where we have that conversation, there is no cost. It's covered by the replacement of the existing infrastructure. So that's something to throw your way to stimulate accounts payable to perhaps take the next step going forwards, but also with one eye on the fact that this solves your e-invoicing mandate problem as you go forward as well. Okay, I would like to thank hugely the participants today. We've almost managed to do it in an hour, but obviously there were so many of us coordinating us was meant we were never going to be able to practice this before we did it. So we're over by a few minutes. But I would like to just offer a poll and suggest no pressure here. If there's anything that you would like us to follow up on, whether it's receiving our report that's in conjunction with the webinar around breaking the KPI ceiling, whether you want to book a demo maybe that goes into more depth, and we can set that based on your specific customized needs. Test our upgrade cost profile, because it'll be a proper test, and that's probably only a 30-minute phone call. And if you want to book a call just to swap ideas with our GPOs, or with Helmut, or with Matt, or myself, or Jasna, you're very, very welcome to do so. And it would be our pleasure to continue the conversation. And you know, if it works out that we want to work together, that's fine. And if it doesn't, then we're all learning from one another. So that's the way we go. Okay, well, I think you can see what's coming out of the polls here. And we look forward to discussing this stuff with you more. Do we have time for one question?
Yes, Steve, I think we have time for about 2 questions, if you answer them quite quickly. I'll just jump straight into that. We've had a few from the audience. So the first one that I can see is, how long does it take for the AI ML model to learn for GL coding, etc.?
Wow, that's detailed. Jasna, do you know the answer to that?
Yeah, so it depends. It depends how complex the vendor posting is. So if you use, for example, for one vendor, 16 different GL accounts, it will take longer as if you use for one vendor only one GL account. Then you just need 1 or 2 examples and the module will know it already. But if you have multiple GL accounts used, then you need at least 2 to 3 examples per use case so that the model can learn from it.
And if I can add from my experience, what we've done is that we actually, before we went live, we shared with Springtime team around 18 months of data so that they can already train the system so that we're not on the go live, we don't start from zero. So for us, it was actually quite a high level of automation from day one because we shared this data up front and they were able to train the system before we even went live. So that was very helpful. So I think, yeah, like Jasna said, it really depends, but what you can do is prepare yourself before you even go live to train the system.
Yeah, point.
Thank you so much for answering that. And then just our next question now is, how do you measure payment on time? What do you use as a baseline?
I think that might be something back for Alex or for Helmut, I think, on that one.
I mean, paid on time is probably the most known metric, right? I mean, typically you add a buffer of few days plus minus. But yes, it's how you have managed to comply with the payments that you had agreed in the contract with the suppliers. It's literally on-time payment for the transactions, and nothing very, very specific there.
Great, thank you so much for that. And unfortunately, we'll have to wrap it up there as we have gone over our time. As you can see on the screen, there are the emails for our speakers for today if you are interested in contacting them. And thank you to all of our speakers for today for an excellent presentation. I know our audience got some great insights from that to take away with them today. And thank you to everyone that joined in our audience, and I hope to see you at one of our next webinars. Thank you and take care.
Thank
Alex,
you very much.
before you go, are we going to offer the slides to everybody? So if people want the slides from the presentation, they can email me for them if they want.
Yep, no problem. So I can provide that. If you see it on the screen, if you just or email me or email Steve, then we can send over the slides to you if you just make a note of that.
Wonderful.
Great. Thank you so much.
Everybody for your attention. And thanks, Alex, for hosting.
Thank you.
Thanks, everyone.
Thank you.
Bye, everyone.